you. Lit in here. That's in everywhere. Everywhere designers everywhere. We in there. We in there. We in there. In there. We in there. We in there. Young T, Young Emma, Young G, Young P, Young Emma. Hey. Hey, the Gunner Force is live. Catch him with the petition. With petition. And the Windsor main tension. Stop that. Welcome back to another live stream. We are live, actually. I don't know what the stream's gonna be about. Is it gonna be about finance? It's gonna be about gaming because it's 4 o'clock on a dot, and it is Labor Day. Labor Day. Dang, I need to. Labor Day. Labor Day. All right, I need the. Sheesh. I don't have the applause. I guess I don't have the applause. My soundboard, man. Oh, it's Labor Day. Yes. The cheering. Labor Day, happy Labor Day. And what we doing today? Is, you know what? I wasn't planning on having a financial stream, but some of this, I just gotta get it done. I'm gonna get it done. You heard me? I'm gonna get it done. You heard me? Cause I gotta do it what I gotta do. Today we're gonna knock out some things. We're gonna knock it out. We're gonna put in that work. We're gonna put in that work. All right. So starting out this week, how let me review some of my trades, bro. Oh my gosh. I YOLO'd. Oh man, you know what? There's no streamer who keeps it a buck like me. So I'm gonna review some of the trades I took this week, and they were awful. On full mode, I broke all my rules, bro. And that's not okay. It's you know what? Like, I try to not beat myself up for making like trading mistakes, but guess what? I am human. I'm human. Hold on, let me grab my notebook because I don't have my notebooks there in the living room. I was, chatting it up. I was charting it up. Hold on, I'll be right back. Whatever. Man. Look, this is my journal. See, it's like wrong page. But I had to tell myself, bro, look, you guys to do better. I revenge traded. I did all the rules you can break. I broke them. You know what I'm saying? Because my emotions got the best of me. You know what I'm saying? And I did not keep that tunnel vision. I did not do the simplest things. I did not backtest. I didn't do the homework. I didn't backtest properly. I backtested, but it was not done properly. That's the difference. If you don't backtest properly, you're not gonna trade properly. Can I get a? Yeah, you're not gonna backtest properly. So, start out. Let's get to the. I'm already in the reactions, so I'm gonna do some reviews on my last trades, bro. Straight booty cheeks. Can I say straight booty cheeks? Straight booty cheeks, man. Starting out with Nvidia, bro. I had a Nvidia sale this past week. I think last week, and that was good, but execution was bad. Bad execution. Terrible execution, bad execution. And then one thing I noticed is I was trading around news, bruh. Terrible, terrible idea. Don't do that to yourself, brethren. Don't trade around news, because I was trying to, catch some earning call wins and stuff, but I got cooked instead. You know what I'm saying? Trading the video. I was just booty cheeks. And then you know what's funny? I decided to like get into some Microsoft. Look at this trade. Straight to SL. Look at the trade straight to SL. Like, oh my gosh. Oh, but like I should have waited for confirmation on the downside, right? I should have waited for confirmation. But you know what? It's booty cheeks. It's over. That was a bad. It wasn't a bad trade, but like this trade led me to doing some revenge trading. And then I got this other trade I did was the Roku. Where you Roku at? Where Roku? Roku. I think it's my other watch list. No. Open these lists up. Money be crazy. What the heck? Looking for Roku. Man, where you hiding from me, brother? Nope. Open list. Maybe it's in the earnings hub. Yo, Roku play. Oh my gosh. Is this Roku? It wasn't Roku. Was it Roku? It was Hood. It wasn't Roku. It was Hood. Low-key, this Roku play still breaking out nicely. Shit. Still breaking out nicely. It was the Hood play. Oh my gosh. So one thing I noticed, I had some old analysts, like technical analysis. Shit, I can't speak. I had some old markups on the Roku, and it was showing me buy. On the old technical and I'm gonna say it again, on the old. Dang, I can't speak. I had some old markups on Roku on Hood. So it's telling me I had a buy signal on my Hood, right? But when I went ahead and refreshed my markups, it wasn't in no buy or sell area. But guess what? I already got into it. So this is what made me feel like a dummy. My goofy, but like internally I was telling myself, you need to get out because you're not in a buy or sell zone. You're more in a sell zone because once price starts to use this as a support level, because I seen this is using it as support on a 4 hour, because this was a support. So I was like, instead of price, and then it's coming back, it's bouncing off of it, it's not making higher highs. Wait until price moves at the 110 level, or I should have waited and sell below this 4 hour support. But I was already in a buy in the middle on the 109 level. But instead of me just closing and just waiting for the right opportunity, waiting for my setup to actually take form, I went ahead and held, and I got cooked. Like bad. I got cooked bad. I ain't gonna lie. It was a bad cook. They cooked me like family on. Bad trade. That led me to the next worst trade. And that was YOLOing the video calls, bruh. Why did I do that? Around earnings, right? Earnings, I YOLO some earnings because one thing, they inflate the price around earnings. They inflate it. So my goofy bum ass, I'm not goofy. I'm a king of trading. I'm the king of trading. So what I ended up doing was I, was like, buy. Bro, the next day, price did not move and those earnings melted. Oh my God. And the earning, bro, the target prices were up here, bro. Oh my God. Never trading earnings again, unless it is what? Unless it is prices above the resistance. Even this one was shady. Yeah, like never trading earnings again, man. Never trading earnings unless price is above resistance. Even though price is above resistance, because I've plenty of examples of getting cooked. And when price is above resistance right here, where price was like right here. And then it just went back down. But shout out Cisco coming back. But one thing I want to say is that with trading, it's not personal. You know what I'm saying? You trade, you have a bad week, don't take it personal. See it as a learning opportunity. See what the mistakes you make and see what you can fix. Like look at the opportunity to fix. Look for opportunities to what can I fix in that moment? What can I fix currently? You know, what mistakes am I seeing over and over again? And one of my mistakes I'm seeing is that my execution is not the best. You know what I'm saying? And then me failing to execute on those perfect trades, you know what I'm saying? Failing to execute led me to, you know, kind of tilt. You know, tilt is something where you just, you know, get frustrated. You just want to get that one. You want to show it to the market, show it to your friends. Yeah, I'm a better trader. F all y'all know. But it adds up, accumulates slowly. And then once it comes out, you're going to start YOLOing and you're going to forget your rules and your patience going to go dry. So just, I know I tilted last week. I YOLO'd. I was upset. You know, I was upset. I wasn't happy with taking losses and I was making mistakes. I was making, you know, minor mistakes. And then mistakes I really should be able to fix. Mistakes that are fixable. Mistakes that are fixable, right? So it's not like I am forever lost. I'm not forever lost. I'm not forever lost. I am locked in. You know what I'm saying? I am locked in. So with this Labor Day, I'm about to show y'all, you know, I'm about to clean up my charts again. I'm not even trading. I told myself I'm not trading this whole week. This beginning of the week, the beginning of the first, like the first of the month, like the first week of the month, I'm not trading. I'm going to be solely back testing. You heard me? I'm going to be back testing. I'm going to be back testing, you know, putting in that work. So, but one thing I told myself, we got to also do that homework. You heard? You also got to do that homework. So we're going to start out with some homework. And you know how we start with our homework, though. You know, I'll start out with that homework. So let's ask ChatGPT what happened last month. Happened. I think that's how you spell that. Yeah. Oh my gosh. What happened last month in the okay, so SPY 500 or SB 500 went up 10 points last month. It's pretty good month, man. August, when did not QQQ went up $2. Okay, so highlights in August 2025, a strong market performance at the end of August with a 1.9% gain, marking its fourth consecutive monthly increase. It closed the month around 6,460. The Nasdaq Composite and Dow Jones ended slightly lower at the last trading day, but all majority indices remain firmly in the green for the week. All the highs, all the all-time highs and momentum. On August 1st, optimism over NVIDIA came, earnings polled, and record closing highs. The Nasdaq and Dow Jones also ended higher. Okay, summer rally basic best since 2020. So over the summer, end of May through August, the SPY rose over 9.3% and Dow Jones rose 8% and Nasdaq surged 12%, the strongest summer performance since 2020. All right, so we have a great summer. We had a good summer, man. Ain't gonna lie, like if you were holding throughout the summer, the last 3 months, you would have been up all the way up. Flexing on my haters. Yeah. And then, so the macro factors fueling the rally. So AI power rally and expectations for federal interest cuts were key drivers to market optimism. Earnings from mega cap tech firms, especially the communication and AI sectors, increase in rates. Expectations were shifting towards cuts, with markets anticipating a possible Fed rate reduction in September. Growth among international equities helped the U.S. dollar weekend, boosting returns in foreign markets. Gotta get that water. Okay, and then we had the global market trends and regional disparities. Okay, the global market. Okay, because seasonal and historical context. Historically, August is known as a weaker month for the SPY, averaging a 0.6% return over the past 39 years. Yet this August denied most norms among the strongest earnings optimism and rate cut expectations. Maybe I was saying I was wrong. I was wrong because I usually August is historically the worst months. You know what I'm saying? So it is a summary table. So 10 trend and factor insights. So overall gain, SPY 500 all-time records, rally best performance since 2022, key drivers, AI sector earnings beat and rate cut expectations, weak USD dollar, rate policy. Okay, you know what? One thing I need to do better on my Forex calendar, bro. Oh, can I undo that? Like, let's see what the FX calendar looking like. So Tuesday, we have the PMI. What is PMI? Actually, what to expect next this month in the stock market. Yo, guys, we in Q4. By the way, we are in Q4. So, key drivers. So Federal Reserve and economic data. Investors are closely watching August job reports coming up. Inflation data reports. Okay, cool. Historical seasonal. The historical seasonal of September. Historically, September is the worst performing month for U.S. equities over decades. The SPS 500 suffered an average decline of 0.7% to 0.9 in September. One outlook even projects a 5 to 10% pullback before a rebound by the end of the year. Oh, baby, we're seeing that currently. You know, within the video, like, you know, right now we had that pullback. Let's see. What's our watch list? We're still at all-time highs, right? You know me, I'm watching. Spy on you. Yeah. Not a game, brother. It's not a game. But yes, we are expecting pullback. Analysts commentary suggest that positioning like overweighting gold and international bonds and underweighting U.S. tech could help tilt the odds in your favor and challenging the month. Concern U.S. stocks are trading at some of the highest valuation on record, even exceeding .com era levels. We might see well above the 25 year average of 16.8. Tech giants like Nvidia mark up 40% of the index. 40%, two companies, 40%. It's crazy. Oh my gosh. I was talking to myself this whole time. Dang. Why nobody told me? Dang, I was reading to myself. Hey, it is what it is, man. Struggle streaming, man. Struggle streaming. I was too locked in. Yeah. All right. So look at the global markets. So abroad, European are showing strength support by beating healthcare news. Okay, in China, bullish forecast for JP Morgan and Goldman Sachs suggests that the CSI 300 could deliver 10 to 35% returns by 2026, delivering a liquidity support. Okay, cool. So here are the strategic takeaways. Expect choppiness at the least through mid September as markets digest economic data and anticipate the Fed moves. Diversify your equity exposure. Shift from focus towards value sectors, small caps, international equities, or defensive plays to mitigate risk. Watch for valuation if broader specters regain favor amid lofty tech multiples. Keep an eye on global markets, particularly European and China, which may outperform U.S. Uncertainty. Okay, cool. Nice. Wow, that's beautiful. PMI. What is the PMI? What is ISM PMI? What is the ISM PMI? ISM. So ISM service supply chain and purchasing manager at hundreds of companies across the US. So they're asked about things like new orders, production. I'll say it's an index calculation. So it reaches above. So responses are compiled into an index where above 50 is expanding, below 50 is contracting, and exactly 50 is no. Oh, so we are contracting. Okay, that's not good. Types of PMI. So there's the manufacturing, which focuses on factory. Okay, and then there's the services, measures service industries like finance, healthcare, and retail. Why does it matter? Is one of the most is one of the earliest monthly economic reports, often released on the first day of the month. Markets watch it closely to give forward giving economic before. Okay. And then ISMI prices. Okay, so example, if the ISM PMI comes out for the two, you know they're expanding. If it falls for the extract, why does it matter? Okay, markets. A strong PMI suggests market engulf and expand. A weak one can signal slowdown and recession risk. Oh wow! And we're forecasted to have some weak shit. We've been extra. Oh wow! About the price. What is ISM prices? So prices. So it measures prices. So let's see. What it matters? Inflation signals. So rising. So the index. Okay. If ISM manufacturing PMI and the price is at 65, it means factors are growing, but also okay, let's read the right here. So price shown as price paid in the report is one of the key sub indices measuring. Okay, so what is price measure? It tracks whether companies are paying more or less for raw materials and input with prior months. Purchasing and supplying managers are sure if there's an input cost. Higher, same, Okay, what does it matter? A rising price suggests inflation in the economy since companies are paying more for goods. Falling prices point to easing inflation. So Fed Fed policy insight. The Fed Reserve monitors this as an early inflation gauge. If the prices jump, it may reduce the likelihood of rate cuts. If the market bond, okay, that's cool. It is a job opening. Job opening. Give me. So it measures. Okay, the J is a report for job and labor survey published monthly in the U.S. Bureau. So what does it measure? It's the number of position employers are actively trying to fill at the end of the month. A job count as open, if open, whatever. So work could start within 30 days. They're active. Okay, so what does it matter? So high openings, strong demand for workers, low openings, cooling down labor demand, wage pressure, more openings than available workers can push wages higher. And then Wage Watch, the Federal Reserve used the JOLTS to key gauge the labor market health when setting interest rates. So in the report, so 8 million job openings, but there are only 6 million unemployed workers. That shows a tight labor market, which could fuel wage growth and inflation. Uh, okay. Okay, so we have this in unemployment claims. Then you got the non-farm employment change. Just give me this too. I'm just gonna better to understand, man. What's going on with this G? Sure, I'm live on YouTube. I'm live on YouTube. Let's get it. I'm live on YouTube. We got 72 subscribers. Let's get it. Let's get it. Let's get that cheering. Let's get that cheering. 72 subscribers, man. Who can do it better than me? So why does the jolt matters? I already did the jolt. I did the jolt. I gotta do it. Boom. What is the ADP non-farmer employment change? Let's see. Why does it matter? So early peak at the NFP, although not always perfectly aligned, the ADP report often sets the tone for the official labor market release for the BLS. So market influence is stronger than expected. AP result generally supports a bullish outlook, and the U.S. dollar signaling a sorry, I had to burp. Oh. Okay. So you want this to go up? You want this to go down? You want this to? I don't know. That didn't make sense. By PMI services, average hourly earning, and unemployment rate, which is pretty low. Let's see. What is the unemployment rate? So unemployment rate. So the current unemployment rate is 4%, holding a steady previous month, unchanged over year. This figure is near the low end of the range over the past year, which has fluctuated between 4% and 4.2%. The next data release is August. Yep. Why does it matter for trading? So the unemployment rate is important data points for traders because directly affects central bank policy and risk segment. Here's why it matters. So unemployment rate. So stable inflation, maximum employment. If the unemployment rates unemployment rises sharply, the Fed may cut rates to stimulate growth. If the employment stays low, but inflation is sticky, Fed may keep rates higher for longer, bearish stocks, and bullish for the USD. Got it. Market expectations. Late traders don't traders don't just reach for numbers for itself, but they know if it compares for forecasts. Better and then a trading example, if the unemployment rate jumps to 4.5% instead of the 4.2 forecast, market may price it markets may price in quicker Fed cuts, so short stock rally short term, bond yield drops, USD falls. If unemployment stays with a strong growth, markets might fear higher for longer, or for longer rates, stocks might fall and yields. Okay, that's cool. Thank you for that. I really appreciate that. I really did. See what's going on with the earnings hub. Even though I don't trade earnings, I'm no longer trading earnings solely because something is dropping. I've noticed that earnings is more of a trading earnings is more of a gamble than actual trading, like through my experience, I've lost way more money trading earnings than my own strategy. So unless price is above or below where I needed to be and I've all the confirmation, maybe then I'll get into trading earnings. But what I noticed when you are trading earnings, your contracts that you hold are inflated during earnings. So for my sanity, I'm gonna wait till earnings drop, and I'm gonna see where price goes. See where price goes. Because earnings, they hyperinflate, hyper hyper. I can't speak. Hyperinflate those prices, man. Hyperinflate those prices. Ooh, maybe I can look like a week out and see. Okay, maybe prices are maybe I can get into prices before they get inflated. I don't know. Maybe I can make money that way. I'm always learning. I'm a student to the game. So we see Dollar Tree. Dollar Tree. Um slow Q2, slow Q1. But hey, Dollar Tree, bro, with the economy like this, I see Dollar Tree. I see why Dollar Tree is going crazy, but dang, just having a good year to date, just up they're up 40 $30 man. Damn, shout out Dollar Tree, man. And then their movement is just steady upward, the steady upward. So let's see, Dollar Tree. Let's see, Dollar Tree. But we're seeing it's going to monthly, man. Last few months. And Dollar Tree, look, don't tell me I analyzed this. Oh man. And I did this probably at the beginning of the year. Dang. Dang. Let me add Dollar Tree to this G, man. Damn, see that? And then one thing about trading, man, it's all about patience, man. You being able to be patient, man. Patience pays off like a mother lover, man. I think that's the part that frustrates me because I know myself. I could work on my patience, but you see this? You see this price made it support, daily support. I already called it out. I'm not a genius. I'm just impatient. That's why I don't make money. I don't make the money I desire or I want. But you see, just being patient with price, seeing where it's gonna go. FedEx. Yeah, I'm looking at you, FedEx. I know you want to break that. Let me see. I'm gonna tap right there. Be patient, man. Be patient. Back to Dollar Tree. So they're about to report earnings. And they reported earnings here. Lost like $3 billion, made 100 billion. Damn. Damn. Look at that. Oof. You'd think price would just go to trash. No, it didn't. Kept pushing, man. Kept pushing, bro. And then the reason I think why Dollar Tree is expanding, going to create the economy, the recession we're in, things are more expensive. People would go to Dollar Tree more. They will make more money. That's why, like, you see, like, okay, why is Target? Why is Target? Go ahead by Dollar Tree. Like Target right here. Why is Target struggling, to break above 100? And then Dollar Trees and even Dollar General right here. Dollar General is above higher price ranges because people are not going to Target. They're going to Dollar Tree. Say, things are becoming more expensive. Prices definitely and then right there. Support. Broke it. I'm just gonna be patient, you know what I'm saying? I'm gonna be patient. We're gonna see what price does. See what price does. Yeah. Let's look at their what's it called? Let's look at Dollar Tree. Look at their financials. They had having a great year. Like, 35, 35, 30, 32, 30% annual revenue growth. Cool. And then quarterly, um, Q Q Q Q3 wasn't the best. Made more. We had like millions, getting thousands. I made like a few billion. Yep. So that drop definitely hurt them right here. Q4 earnings. Having amazing. I don't know. Maybe it's done year over year where they always drop off. And then I see the income. Income went up still. Net income still went up. Which is good. Lost money in Q2. I might see that again. Then cash flow, free cash flow. They have some free cash flow. What are they doing with their balance sheet? So they have total assets of $18 billion of total assets, and then 14 billion. So it's not a great uh asset to liability ratio, but we see that we have some shareholder equity, the net cash flow, total debt. They have low debt. It look like they're paying that off. And cash per share. I don't know. It's interesting, man. Interesting. And there's a cash flow. They're investing. Mm-hmm. Ratios, market capitalization, then asset turnover. This asset GPT. What are the key things look for in for a what? Start off with the income statement. In a company income statement. So, excellent question. The income statement, also called the profit loss statement or P&L, shows companies' revenues, costs, profits, and overall. So, key things to look for: revenue growth. So, the top line, the total revenue or sales. So, year over year growth is sales momentum strong, equivalent. So, this is quarter over quarter. Is the business improving quarter to quarter? Watch for slowing or negative growth. Okay. So cost of goods sold. So direct cost of goods. Okay, and then operating expense. Are companies growing faster than revenue? Is the management controlling costs during slowdowns? Operating income or operating margin. Earnings before interest rates show how profitable the core business is. Okay, that's a lot of keys. So these are quick checklists for traders. Revenue growth. So is the sales momentum accelerating or slowing? That's the revenue growth. Is the operating margins, are they expanding or shrinking? Are expenses growing faster? Da da da. So and then E the EPS versus estimates. Did they beat or miss expectations? Outlook and guidance, better or worse than Wall Street expected. And then earnings quality. Are any red flags in one-time item, cash, or net income? So, would you like to create a visual example? Uh, yes. Create a visual example. Mm-mm-mm. Is the company growing? Are they beating expectations? So how do I see that if they're beating expectations? So quarter over quarter, they are beating expectations. Okay. Margins are gross and operating margin improving. This signals efficiency and pricing power. Margin. What the hell is a margin? Operating expense. Gross margin shows efficiency and pricing power. This minus that. So revenue versus so they have good gross margin. So this is the cost. This is what is it? So gross profit. This is the total revenue, other revenue, and then cost of revenue is $2 billion. So the gross profit is $1 billion. Sales admin is 1 billion, and the operating expenses. And then we have our item, and it's a pre-tax. So then we go down to our net income, less than $300 million. Is that true? 300 million revenue. It's revenue. Hmm. Cute. Okay. cash flow. You learn. You got to learn. And then there's the non-operating items, one-time gains or losses distributed. Okay, so bottom line. Okay, cool. Now, what about the balance sheet? So absolutely, your balance sheet is a snapshot of a company's financial position at a specific point in time. Traders and investors use it to assess financial health, stability, and leverage. Here are what to here is what to focus on. So current assets, cash, account receivable, inventory, short-term investments. Okay, cool. And then there's liabilities. There's the non-current assets, so property, plants, equipment. Then there's a key ratio. So current ratio, assets divided by liabilities. And then there's the quick ratio, cash plus receivable divided by liabilities. More significant and okay, Cool. So liquidity. Can the company pay short-term obligation? Leverage is a company relying heavily on debt. How do you measure leverage? Do I know the company's leverage? Okay. So, financial stability position. So, position equity, management debt, manageable debt, and cash on hand, and healthy balance sheet, efficiency. Monitor receivable inventory and asset utilization trends. Um, and you uh give me examples of the quick takeaways in trading. Absolutely. So example, liquidity, leverage. So liquidity, can the company pay short-term debt? So example, company has a current ratio of 0.1 current asset, current liability. So trading is risk of cash crush. May avoid buying or even short the stock. Current ratio of the 2 point stronger. Strong liquidity can waver downtrends, attract for long positions. Total liability. This is shareholders' equity. Its current assets is greater than current liabilities. Leverage is the company relying heavily on debts. So debt debt to equity ratio. So ratio is 3.0%, very high. Trading implication, high risk if interest rates rise, stock could drop if earnings falter. Get debt to equity is so conservative financing, more stable stock, potential safer for swing trades. leverage. High debt imply returns but increase in bankruptcy risk. Can the company pay? Is the company relying heavily on debts? That is a debt to equity ratio. Equity. And then financial stability, positive equity, manageable debt, strong cash. Example, company shows rising shareholders' equity, stable debt, and cash flow. Trading implication, confidence in short-term health, and bullish bias may hold through market volatility. Red flag, negative equity or declining cash. Stock might face pressure in a downturn. Trader may avoid short term. Show me example how to find leverage. Okay, what is leverage? Leverage is how a company relies on debt to finance assets. Too much debt, higher risk for drop. So moderate debt can amplify. So debt to equity ratio. So the total debt divided by shareholders' equity. Give me. Let's see. I'm doing the math right now. Or let me just do the calculation in front of y'all. Calculator. Oh hell no. I'm on calculator app. Calculator. So we're seeing 14 point that divided by 3.9. This is good, right? That is very high. Whoa! Let me see. Whoa. Dang, this is fundamentals right here. We're doing fundamental analysis. Ain't gonna lie, this is good to know too. Like, bro, I'm about to consolidate my portfolio. Consolidate my whole portfolio. Like, I'm about to consolidate this portfolio. I know it dropped like crazy. Dang, I got $150 to trade. Why? Why not? on my pits, man, but I'm not thinking. Ugh. Man. Leverage. Can a company pay off its short-term obligations? Hmm. Hmm. Okay, so that's their liquidity. I'm about to put this there. Man. Into the money. Boom, boom, boom. Quick. Wow. That pavement. Fundamentals. Doing fundamentals. Hey, you want to join my Discord? Join let Discord. Join let Discord. Money moves. 2026. Gonna be Uganda trades. Gonna be Uganda trades is coming to the server. Gonna be a different server in 2026, but join it. Money moves, and I'm just learning, man. I'm learning right now. I need to take screenshots of this. These are the key takeaways. Boom. Put that in the Discord. Okay, liquidity measures a company's ability to pay short-term debts using its short-term assets. Higher liquidity, safer, less risk of default, common ratio, current, quick ratio. For example, like the screenshot, step-by-step calculation, like the liquidity. So a company can cover short-term obligation with current assets, potential liquidity problem, be quick ratio, removes inventory, other liquid assets. So your cash plus a cost divided by current liabilities. Okay. So trading implication. So current company can meet short-term obligation comfortably. Quick depends on inventory paid to pay debts, potential risks, and stress scenarios. Just take a screenshot of this. Leverage. Okay, so leverage is a company debt. So debt shows very high, meaning high risk. Wait, that don't make no sense. So example, the debt to equity ratio is 3 to 5. Very high rating. So if we go back to leverage, so boom, so it means that a company has $2 of debt more for every dollar equity. This is a high leverage, high risk. If the revenue drops, interest rates rise. So so other leverage measures, debt to asset ratio. Okay, boom. Measures that a company assets are financed by debt. Total assets with shareholder equity shows leverage and finance assets. So conservative, lower, moderate, and high risk of risk earnings. Step by step, calculating leverage. I'm looking at it. Okay, total assets. Okay, so it's total liability divided by equity. So higher risk and revenue drops. If the company's total liability, boom, is total asset. We'll take the total liability. Okay, so it means the company. This is very high, very high. And then we need our calculator. This is very high. Then think about it. 3. Risk of revenue drops. He's saying this is very risky. Do like NVIDIA. They cleared their shoot. So we did it. It was total liability versus total it was total liabilities divided by shareholders' equity. Where? Okay. Other. Okay. We did. Like for me, if you want to create a visual diagram, got other ones too. You got other ones to research. Uh, Key measures of equity. Equity equals assets versus. So absolutely. So let's walk through how assets, financial stability uses companies' balance sheets. Financial stability is about whether a company has enough assets, manageable debt, and positive equity to survive and grow over a long term. So we measure our shareholders' equities. So positive and growing, a company is building value for shareholders. Negative, company owes than it owns. Risky, that equals risky. So for example, a balance sheet, da da da. Okay, so know about the equity. So here's the look at the debt versus equity. So we take total debt divided by the equity shareholders' equity. And then that's how we moderate leverage of 2 point manageable risk, but watch interest and cash flow. So cash, step 3, cash caution, fusion, check cash plus liquid asset, relative short-term liabilities. So cash ratio, so cash plus short-term investments equals, this is an example of cash equals 50 short-term investment, current liabilities. And you got cash flow. Read some on YouTube. You gotta learn. Sorry, I'm just writing. I am just writing. I'm just writing down. I gotta work on this, man. Just understanding my balance sheet knowledge. Y'all see me just doing the research. Let's see. Okay. Okay, step four, trends over time. So positive equity that increases over time. Financial stability improving. So rapidly declining equity. Those financial stress. Okay. And then practical examples. So company A, positive equity, low debt, safe buy in volatile market. Negative debt, high debt. Negative equity, high debt, risky stock, likely volatile, short or avoid or short. Positive but declining trend, monitor careful, may become risky. You can I'm a visual learning. I'm a visual learner. Look at ChatGPT doing its thing, man. Utilize the tools, man. Utilize AI. Utilize AI, man. That's one thing about if you want to become successful or anything. Utilize the tools you have, man. There's always something in your game that you can prove that you can prove and you can create. You can become better. I say that. Utilize your just utilize it, man. Utilize your tools. Your tools, you as good as your as well as use your tools. So like don't be too prideful to show that you are willing to learn and you're willing to, get that better understanding. Once that's loading, let me clear the Mag 7, man. Mag 7. Mag 7. Clear. Just a trade I didn't take. LOL. Whatever. It's good. And be mad. Amazon came back to Earth. Everything not gonna be perfect. Not gonna be perfect. Mm-mm. Wow, it took that long to load this. Dislike this. What this is why it took this long. Look at that. ABC Corp balance sheet. Assets green, liabilities. Oh wow, thank you. Okay. Then I think I need to ask you one more question. It didn't bruh. I hurt ChatGPT's feelings. cash flow. Cash generated from core business operations. So key things to look for: positive cash flow. So companies generating enough cash from its operation to sustain. So negative cash flow could indicate a business is struggling to generate cash even if profitable on a paper. So compare operating cash flow to net income. So okay. So investing cash flow. So quick takeaway. Strong positive cash flow is a signal of the sustaining business. Investing cash flow is generated. And this of the trading. Oh, okay. Understanding a company's balance sheet can be a huge edge in trading, especially if a stock trading or swing position helps identify strengths. A strong balance sheet, how debt, equity growth, less risk of bankruptcy or financial distress. So, strong cash flow, a positive operating cash flow, and free cash flow company can use on growth, pay dividends in weather downturns. The trading benefit, you can favor companies with strong financial health during market volatility. They're more likely to hold value. Spot red flags early declining cash. So got a fruit fly. Oh my god, that's what I hate. I mean, I think fruit fly in my plate, man. Dang. Almost got it. Okay, so timing trades. Company strong cash flow can afford more stock buybacks and dividends, even boost stock prices. Companies investing in capex may have short-term cash drain, but long-term upside trading benefit. You can time entries, exits on like those announcements. Better risk management, uh, knowing leverage. So identify equity and free cash flow helps you assess downside risk. A benefit trading benefit helps set drop stop losses and all that. Okay. All right, I need to do some YouTubing on better understanding. Got it gone. All right, man. See, you always learn something with me. There's always something to learn. But now I know, like, okay, see the cost of operating. Um, you see how revenue's working. Look up YouTube. I do it. I do it live. Uh, how to understand company financial com read. I don't want to know how to read. No, no, fair use, fair use, fair use. We're learning about income statements. Dropping a video for long-term mindset, and I'm giving them a subscribe. Let me just. Ooh, I'm gonna do that research in my own time, cause I'm gonna be here holding y'all up. But let's do a. What do you call one of my homies? Devon. Devon. Devin McKinney. Your call has been forwarded to. Damn. Mr. Scientist. Ooh. Be interesting. Your call has been forwarded. Bam. I tried to call on him, but he's not available. And Siri, you suck. All right. The last three weeks, price is definitely showing pullbacks. We at this support level. Price is at this support level. Then we have resistance. You have this daily resistance right here. That could have made the most out of it. But we didn't. So it is what it is. It is what it is. Because I did see this right here. But, you know, foolishness. But see, we got dating prices near. Then we this right here. This right here. See what Monday. See what this week does. I'm definitely not trading, but I'm gonna be on the lookout. This is what on the video is looking in between these two. This is clearly a no trading zone, but see, price is definitely failed to break this 180 level. But if price decides to come back, yeah, it's definitely a buy zone right here. But we're gonna watch carefully, see what price does. Let's go to the monthly from Microsoft. And Microsoft having that pullback that I was waiting on. Even on the weekly, we have the past 3 weeks for pretty tough for Microsoft. But support level, yeah. No, power. Boom. Boom. See what I'm saying? Y'all see what I'm saying? But we are on a downtrend. I see buys above that. I see buys above this level. But gotta be patient. Has to be patient. Right here. Not trading this week. I'm not trading this week. Seeing a short week. Let's see what happens with. See what happens, man. And we have Google. Cool. Bro, oh my gosh. I called this. Google will hit. It's Google will hit its all-time highs, and it did. Like, man. Like, who remembers when I called it? Did I ever post this? Let's see my Discord. Let's see. Like, on my phone. These shots on my phone. This is like months. This is in May. So just having a long-term outlook is always important, man. Let's see where Starbucks is at. Look, Starbucks. Man, I need to start screenshotting more. Bro, my new chat is gonna be crazy, bro. New chat. That was like $80. Starbucks. It's like 88. God dang. Food didn't grow. Oop, broke out this level. Got close and back underneath support. Boom. Ah. Ah. Pain, bro. Can Google, bro. Look at Google. Look at Alphabet Inc. You a part of the Alphabet Mafia? You not. Okay. Just breaking higher highs, lower lows. For right now. You can hope for. Mm, mm. I don't see any price move. You're broken above the all-time highs. So hey, let's see. Are these the all-time highs? Yes, Google's at all-time highs. Google's all-time highs. It's gonna wait, see what happens with Google. Yeah, the Amazon. Let's check out the monthly. Amazon is so close. Oh, it did tap all-time highs. But I've seen some pullbacks though. Yeah, not quite there. Yeah. Oh man. Oh man, net again. Back to back net 697. Oh. Right here. Uh, how fast I technical analyze, I need to work on my fundamentals, man. Amazon going either way too. Amazon can go either way. Break above and hit this 140. Break below. See that down, but we are in a crazy uptrend. Apple. And everybody hit that 260. Broke out this. You know it was a GG. I was seeing some pullbacks. Look for short-term plays. But let's see if price breaks above this level. Then we got Meta. Meta Man. Price at this resistance right here. I see / support. We'll see resistance / support. Only one line. Shorter time frame. Price can go either way. Patient with it. That's all I gotta do. Just be patient. Patience is key, man. I learned that every day. Patience. Be patient. Don't force a lot of things, man. Don't trade off of excitement and emotion. Trade off of trade off of just your knowledge. Wait for price to move. Finally, Ezzy. Man, this is ranging. In the long-term range. But we are in an uptrend. Tells you might break this level. Spine. All-time high. Weak. to the Fibonacci tracement. I look for sales. Yep, this is the part of the stream where I'm quiet. About a back test though. About a back test. About a back test. The late September, man. Late in September. Whoa. Back testing. Testing. Back test like me. Like me. Play some. I don't want to take a risk. Play some. Ugh. Copyrights be tripping. Copyrights be tripping. Copyrights be tripping nowadays. Copyrights be tripping. Damn, been shrimp for almost 2 hours. I trade on a Wednesday morning. Find about the resistance. resetting the chart, cleaning it up for the week prior. It's always good to refresh your charts after trading. Seeing how week ended, so I decided to close that. Okay. Mm, These are my teas. Steez. Dispose my steez. Dispose my steez. There's my sheets. There's my steel. Please. Give them Gloria. Glory. 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 Yum, yum. Boom! Great. Great. Not yet. That's gonna work. Amigo, amigo, bro. Amigo, amigo, that's fine. Yeah, it's my vibe. Amigo. It's just the morning. Oh, later. Yeah, Amir, 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 understand, and the popo. Where the Marda case? Marda. Already called a popo. Oh, my baby, oh. And I wait. What you done to me? Look what you done to me, oh man, oh man. My nigga popo. Pamium, 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 pamium. You know that Welsh. Thank you, my vibe. I'm That's my vibe. Mm-mm. Man, that's my last week. Whoa, I stopped the trading. Really. Survive, understand. I must confess, your body with no pencil. Hey! I'm with me in midnight sun now. Leave me come back here. Darling, there's not my leave me live. And now, all right, let's review some of my trades. See how I did. I'm buying when the price is supported. Buying. Buying. Now we're doing the review part. Great spot to stop. I didn't FOMO trades. When I back tested, I did not FOMO the trades, which helped me. This helped me stay calm during the trades. 2, what did I do? I let price come to my areas and I watched with patience when price was my own. Protected my capital well and care if smaller risk, smaller size trade if price is above resistance, but the turnaround. Yeah, I did good on my execution. Executed well. Bidding. Yeah. Man, what a great stream, though. What a great stream. Labor Day stream, but I dropped knowledges, I back tested, and I was learning on see how easy it is to learn, see how much time can fly when you're learning. I gotta definitely get better at that. But reading the balance sheets, income stat, income. I can't speak. I just gotta do more study on that, because I'm really keen. I'm really keen on my technical analysis. Now it's like, okay, I got my technical analysis skills down. Let me improve my balance sheet reading, for investing wise. So, combining those two, having that technical skill, I feel like I'm really good technical. Now let me get that balance sheet skill all the way up, and combining those, I'll be unstoppable. So it's all about learning and always about improving. Trading's all about improving. But to that statement, I just want to say thank y'all. Thank y'all for being great viewers. Thank you for the love. I appreciate everyone. If you didn't comment or like, I just seen someone was watching, and I appreciate that. 71 subscribers on YouTube, bro. We're the fastest growing. We are the fastest growing. We are the fastest growing trader slash investor on YouTube, man. Like, what a thing. I'm gonna definitely drop more shorts this week. I kind of gotta get back to that, so that's a part of my work. So thank you guys for being so great. I appreciate y'all for this great live stream. I appreciate myself. I gotta appreciate myself because you know what? It's a journey, it's ups and downs, and we always gonna improve and get better. And thank God for everything that we are safe and being able to do this and me being able to show y'all the process. Thank you. Yep, in God's name I pray. Uganda Trades. It is out of here. Cue the music. Most high.